Did you get hit with capital gains on your brokerage account? Shame on you if you did. You shouldn't. You should know this. Oh, my sister just texted me a picture of her in her Pat the Patriot shirt. Yay, we're getting ready to watch the Pats play. But before the game starts, I figured I'd do a couple Q&A. All right, so my man Jim writes in. He says, I consider myself a pretty savvy investor, but I got caught off guard. The past quarter, Vanguard paid out huge capital gain distributions in all their target date funds. Unfortunately, I learned the hard way that you shouldn't have target date funds in an after-tax account. As a consequence, I'm going to have to pay a hefty tax bill. Should have been watching my videos, man. I've been saying this since I've been starting this. Anyway, so here's a Target 25 fund for Vanguard right here. Short-term capital gain and interest was about 40, was at 44 cents a share. Not much right there. It's about a 2.25 yield roughly. That's OI, short-term capital gain and dividend income or taxes ordinary income. So not much there. $2.86 per share, 2.86 divided by the reinvest price of 20.34. They paid out 14% in long-term capital gains. All right, so that's you can't consider yourself a savvy investor if you're unaware of how capital gains are paid. This is the problem with financial planning, is that we've been, it's just everyone equates investment management to financial planning. And a lot of people think, I don't need financial planning. I know my investments. Obviously, this guy did it. And I'm not bashing this guy, just stating a fact. If you don't know how capital gains are paid, you don't know what the distributions are, and you consider yourself a savvy investor, I hate to say it, you're not a savvy investor. You're just not. This is par for the course. This is basically investment planning 101, frankly. Not knowing this is not acceptable if you consider yourself a savvy investor. All right. So anyway, let's look at that. So let's go. We'll look at 2040 fund. Let's see what that's done, what that was paying out here. 2040 target fund, long-term capital gain. Let's see, $7.55 on 42. And I don't know what this right here is, this distribution yield. That doesn't make any sense. I was like, a measure of the amount of interest and investment received over a given period of time, net of expenses. Well, what's the given period of time? A day? I don't understand, because they're saying you got a 24% on income. So here's your dividend, your interest income on your bonds. Paying 24% reinvestment or distribution yield, and that doesn't make sense. I don't understand, unless they're saying you got this income $1, because $1 divided by 42 isn't a 24%, unless they're assuming this for an annual basis. I have no clue. But anyway, be that as it may. So here we got the long term, the 2040. You got $7.55 of capital gains. Divide that by 4207. Here you got an 18% distribution on long-term capital gains. That's a big tax hit. You got about $1. That's not big. And then a 13 cents short-term capital gains. Not a big deal. So let's go to a LifeStrategy fund. The LifeStrategy. And let's see what we come up with here. Let's go to conservative growth. All right, we got long-term capital gain, 47 cents on long-term capital gain. Short-term capital gain 3 cents. So we got 50 cents of capital gains on $23 a share. Yeah, not a big deal. And only 21 cents on income. That's no big deal. So let's look along right here. The growth fund had a 71-cent long-term capital gain on a $44 share price. That's not a big deal. You want to know why that is? Let's take a look here. So we're going to go look at. Let's go to Vanguard's. Hold on. Actually, I'll tell you what. Let's just go to Vanguard. Hold on. I'm going to show what I'm talking about here. Investments. Let's look. We're going to go to mutual funds. And I want to go to, let's go to Life Strategies. We're going to go to Life Strategy. Right here. Can I search? There we go. Life Strategy. We're going to go to growth. You ready? Check this out. What is the holdings in the LifeStrategy fund? You want to know? Let's look at holdings. Holdings, if we can find them. Holdings, if we can find them. Holdings, if we can find them. Right here. Asset allocation. Oh, index. Index. Huh, interesting. Index funds. So why am I saying like that? Interesting. So let's go look at we're going to go to large cap value index right there. We're going to look at the mutual fund, not the ETF, which is what I own, by the way. And right here, VV, Victor. Let's look at this and see what the distributions were, shall we? Let's see what we got. We're going to look at distributions. Let's see what the distributions were on VTV. All right, let's look. Price, distributions, not really showing us anything. Let's go back to tax. This isn't what I was looking for. Current price and distributions are going to show us the yield right here. That's that's not what I was looking for. Let me pause it real quick. The distributions I was looking for. Income. So 2021. Income. What? Income? What? Income. What is going on here? On Victor. Why is it only income distributions? Oh my goodness, going back to 2017. Let's go to page 4, shall we? We'll go all the way back to 2012. Only income distributions. Interesting. So now let's go to, let's do a capital opportunity fund. Capital opportunity right there. And let's go to investor shares. And let's take a look at what this guy has. Because there's a method to the madness here, my friends. And if you're not savvy if you don't know this stuff. I'm just telling you, man. Don't tell me that I'm a savvy investor if you don't know how this works. Actually, it's annoying to me because a lot of people think they equate financial planning with investment management, and nothing could be further from the truth. Oh, income, long-term and short-term capital gains and capital opportunity. In fact, look at that. Long-term capital gain was $8.15 a share on a reinvest price at $80. That's 10% distribution. Notice what VV did not have. No long or short-term capital gains. None. Is all income. Dividend yield. That was it. Interesting. Oh, but Josh, that's the ETF. I'm talking about the mutual fund. All right, let's go to total stock index. VTSMX. Stock index, right? That's it. VTSMX or VTSAX. That's what it is. VTSAX. That's an Admiral share, so maybe VTSAX. VTSAX. There we go. All right, so VTSAX right there. Let's take a look at distributions, shall we? All right, so we're going to come down here. Oh, income. Interesting. All right, so the point being is, why have if you have a brokerage account, an after-tax brokerage account, which I have, why would you have anything other than index funds in it? It doesn't make sense. You're going to get hammered with capital gain distributions. That's all there is to it. As I just showed you, the Capital Opportunity Fund for Vanguard. What did I say? It was like freaking, it was nuts. But at the end of the day, if you have index funds, you don't. Or ETFs, you don't. We don't. I've talked about this a million times a Sunday. I will keep talking about it, especially when someone says I consider myself a pretty savvy investor. Jim, you're not. It's not just Jim. I'm not bashing the man. You're not a savvy investor if you don't know how taxes are done, and you should not have after-tax in your after-tax accounts actively managed funds. And the target retirement fund is going to be considered that. How do you know that? Just look at the previous distributions, man. Do they pay capital gains? No. If they don't, then the means, in this case, the LifeStrategy funds, the reason it didn't pay very minimal capital gains is because it invests solely in index funds. The target funds, I don't know what it invests in. I don't know. It might actually have individual stocks and individual bonds. I don't know. But before you buy a target fund or a LifeStrategy fund, I'd say I'm buying the ETFs or the index funds, and that's it. And if you need to mix them up, you mix and match. But my goodness, man. Anyway, I hope that helps. Again, if Jim, you're hearing this, I'm not bashing you. Now you know. You took one for the team. I appreciate it. All right, we'll see you.